first time in a month, Bitcoin has fallen below $30,000, a price level deemed to be critical for protecting the digital asset from further downfall. As economic uncertainty caused by a rise in COVID cases clashed with internal market issues, like a rise in regulatory activity and terrible stock market performance, cryptocurrencies failed in keeping up with their extraordinary growth. Is a new cycle upon us, or are we merely seeing temporary volatility? Welcome to Shrimpy, fellow crypto enthusiasts. In today's video, we will answer a question that has been on everyone's mind since Monday. Why did Bitcoin suddenly crash? Explaining market turbulence is not always simple, but due to the current state of affairs, what's caused this week's demise is not terribly difficult to comprehend. But to understand the whole story, we have to explain what led up to a seemingly bloody Monday first. If you're interested in knowing all of crypto's wild market dynamics, we recommend reading Mastering DeFi, an ebook written by Shrimpy, which you can download for free by visiting the link in the description box below. Bitcoin is in a downtrend ever since May, when the asset suddenly dropped by 50% in the span of 2 weeks. As always, altcoins have followed Bitcoin's suit, which led to some dropping by up to 70% in value. Despite being dramatic, the drop was somewhat justified. The first major crash in 2021 was largely caused by technical problems within the market structure. Prices were jumping left and right, but they were not accompanied by an equally significant volume. Additionally, the explosive waves seen during the first few months of the year have not continued into the second quarter. And in spite of the fact that stocks fared fairly well during the same period, cryptocurrencies did not mirror their success. During June and July, other disturbing factors have joined the scene on top of an even fewer number of buyers. Regulators from various parts of the world have started to make their moves. Agencies like the UK's FCA announced further bans on crypto trading instruments, while in the US, lawmakers began pressuring crypto investors in favor of a potential CBDC introduction. And let's not forget about the Asian market. It would have been a surprise if China hadn't stepped in when Western regulators did. So what's the story? Provincial governments such as Qinghai, Xinjiang, Inner Mongolia, Sichuan, and several others have initiated a crypto crackdown that resulted in fully fledged mining bans. Chinese miners were barred from using their factory-sized mining establishments to mine Bitcoin. As per the central government, the decision was reportedly made in order to reduce power consumption and over-encumbered power grids in the aforementioned regions. But what has exactly caused the most recent dump? Was it another wave of regulatory pressure, or was it simply bad news? Not much might have actually happened lately, but as you'll soon find out, it was enough to crash the best performing asset class in the last 10 years. If you're interested in how traders can prepare themselves for a potential bear market, we recommend giving the following video a go. The newest Delta variant of the coronavirus is on the rise as we speak. As countries opened up and removed most entry and quarantine restrictions, the pandemic suddenly took a turn for the worse. Noticing this, stock market investors started to sell their shares, fearing that vaccination rates are not high enough to prevent the possible fourth wave of the pandemic. One event that has definitely jump-started the collapse is the UK's recent reopening. On July 19th, Britain's government officially confirmed their latest wave of relaxation, removing almost all restrictions. Citizens are no longer required to wear masks, bars and restaurants are open, and limits on events and gatherings no longer exist. The government's refusal to drop the ball on relaxation measures was definitely the last straw for TradFi investors. The stock market opened on Monday, and many were left unsurprised by the turn of events. Indexes like the SPX and Dow have lost 2% and 2.71% respectively. Cryptocurrencies were definitely hit the worst. Bitcoin and Ethereum have lost 7% and 10% in value respectively. Smaller market cap altcoins had experienced even harsher losses, dropping by up to 30% in the span of 24 hours. Nevertheless, investors from both disruptive and traditional markets have almost immediately bought the dip, thus showing that bullish strength is just around the corner. Indexes reached their pre-crash level in the span of a day, while digital assets took their time and recovered after 48 hours. At the time of recording, users still speculate if the market might face a dead cat bounce, or if this week's crash was merely a deviation before a potential push-up. Like always, investors will be surprised no matter what happens. Have buyers finally stepped in, or does the miraculously looking price action hide a darker story behind it? Leave your thoughts in the comment section below and let us know your opinion on the state of crypto markets. As always, make sure to support Shrimpy by leaving a like and subscribing to this channel. We'll see you in the next video.